the Managing Director and Chief Executive Officer of CRC Credit Bureau, right here in the studio to tell us more about what they've been doing and how they can help make this work. Talking about credit guarantee, we have Dr. Tunde Popola right here in the studio. Dr. Popola, good morning, and thank you so much for joining us right here.
Good morning. Nice being with you this morning.
Yeah, I wonder if there's been an update. I think it was for 2024, earlier this year, on your database, you had 33 million Nigerians. Is that still the number? Do you have an update?
Oh, yeah. So things are happening very fast and very, very positively in Nigeria. As at last June 2024, it was actually 41 million consumers that are on the Credit Bureau database. But now by June 2025, that data has moved to 50.5. So that means in 1 year, additional around 9 million Nigerians have benefited from one form of credit or the other. And that's at the consumer level. So you can see that a lot of things are happening in that space. Most of them, taking place through the micro lenders, the fintechs, and the new initiative by a lot of commercial banks who also are now having subsidiaries that are acquiring or floating fintechs to be able to just focus of the credit. So we have that going on. For me, that means that if you look at the adult population, bankable population of Nigeria is around 120 million. So if 51 or 50.5 are already there, that means over 40% of adult population in Nigeria are already in the credit space. I've taken one loan or the other in the last 2-3 years. And for me, that's something that is very positive compared to what we used to have before. I think the area we still have significant issue is on the small businesses. Because as at June this year, just around 2 million businesses have had access to credit in the last 2 years or so. And when you look at the SMEDAN data that say we have almost 40 million MSMEs in Nigeria, that is like a drop in the ocean. So that is the area that we need to do a lot more work, because the rate at which access to credit for them is growing is really very low, it's slow, compared to the rate at which access to credit is growing for consumers, who are me and you, in the economy. If we are growing the way we are growing for consumers, that's already almost translating to almost 1 million new people joining the credit space in Nigeria. And that is going to help the economy to grow, is going to empower families, is going to enhance productivity, and then lead to creation of jobs. But then the businesses also need to be ready, because people who are taking these loans will have to spend them. It's for consumption of one thing or the other. And if they are going to do that, it has to be through the small businesses and the large businesses. Most Nigerian businesses are small businesses anyway, so they should be ready to have that. And that's, I think, the gap that we still have.
So I'd like to dwell on why, the pace is slow for businesses compared to individual consumers and all of that. But first of all, help me clarify. You said there are about 50.5 million already captured at the Credit Bureau. Is this like a national register, or is this a CRC number?
This is CRC number, but CRC is the largest credit bureau, so it can be relied upon, because what happens is that all banks in Nigeria are on the database of CRC. All commercial banks, all microfinance banks, a lot of micro lenders are there. So we can use that to say that, okay, maybe the other two bureaus also will have numbers, because these numbers will be duplicated where we have the same number of customers. But we have over 2,000, businesses and financial institutions and other businesses submitting data to CRC. So it's a huge, conglomerate of a number of institutions that are submitting data to CRC. That's why today, in reality, that's probably the biggest data you can have in any credit bureau in Africa, in sub-Saharan Africa.
Okay, so CRC has this 50.5. Yeah. And then, so now let's talk about the 2 million businesses have had access to credit in the last 1 year, I believe you said. So what's making the access to credit for businesses more difficult than individuals? Is it the requirement or what?
Yeah, so it's the requirement. Don't forget that when we talk about credit, we have to talk about capacity to repay the loan and the willingness to repay the loan. How do you know capacity? The banks will have to provide the customers. They have information asymmetry. what we call information asymmetry has to do with that they don't know so much about these businesses, because a lot of these businesses don't still have the kind of information they will need to have to be able to provide them and know whether they have the capacity to take the loans. You will recall that even for the loans that are, intervention funds by the Bank of Industry, they had a 75 billion loan as a line for small and medium enterprises. As we speak today, they've taken just around 2 billion out of that. So there's a lot of gap there. And so we need to be able to find a way to get our small businesses to be structured and to be in the banking space. You first of all have to to have an account with a bank before we can even be talking about access to credit for you in a financial institution. And now when you have that, the issue then has to be with what's the level of formality of your business. Do you have some basic structure that I can be comfortable with as a lender to give you loan? Do you have some level of collateral? And collateral will maybe begin to talk about that when we realize that now government is doing a lot in that regard, and that's where the credit guarantee and some other initiatives come into place. But first of all, SMEs have to make themselves ready for credit by making themselves feasible by approaching and doing transactions with banks, doing transactions in the name of the business, not in their personal name, have some level of structure, have accounting records, have audited accounts. These are basic information that will give some level of comfort to lenders to be able to say, yes, at least I can have some level of idea of who this person is, which this business is, and then can begin to see, do they really need loan? If they do need loan, how much do they need? In what way do they need it? And how can I help them to package that loan so that it can benefit them and they also can repay the loan? So where bank are not sure of repayment, then it becomes an issue. And I think that is still a major gap that we are seeing even for intervention funds. Because those intervention funds by Bank of Industry, it also have to be guaranteed by the bank that they are using, that they will bring back the money. So it's more or less saying that don't give that loan to anyone unless you can get it repaid. If you cannot get it repaid, then you still have responsibility to bring it back.
So I know that some banks, they have maybe some desks for small businesses. They help to train them on all of these things. But I wonder if there are more intentional steps to get them, in the right way. Because even with the tax reforms, we're looking for how to capture some of those informal businesses. And these are the processes, that can make them formal, giving them a structure. But I wonder whose responsibility should really be, to get them to be structured.
Okay, so it's all of us. Government has a role to play. The businesses themselves have a role to play. The business management organizations, the BMOs, also have a role to play. For government, I think there should be incentives. Incentives to help them to say, if you do A, B, C, D, then you get E, F, G. So that kind of thing can help them to say, okay, if you are structured, if you have documentation, if you have audited account, then maybe you can get your loan at a single interest rate. That will be an incentive for them to do that. If you can pass all your transactions through the banking system, that will help you to get A, B, C, D. Even in terms of taxation, it can say, okay, if you do this and do this, this is the kind of tax exemption that you can have. That's for government. Now, I think we should also encourage a lot of them to belong to business management organizations, to associations.
Or at the association level. I know they do a lot of cooperatives now.
Yeah, but cooperatives so you have like FCCI, for instance, in Lagos. That's a Chamber of Commerce, okay? That kind of forum, you can benefit a lot. And I think those are the kind of institutions that I think can do a lot more to attract as many as possible. And if you realize also that they have taking themselves into sectors, subsectors. You have the mining sector, you have the agriculture sector, you have transportation. So if you have all of these associations doing all of that, businesses believe they can benefit, either because they can have new ideas by engaging with other people, or there's capacity building for them, or they can even have access to market. And of course, even have access to credit that we are talking about. If they belong to such association, then that will propel them and incentivize them to be able to join such associations. I think that also is something that we have to do. I always believe that the private sector economy will have to be driven by private sectors. The government will be an enabler, like they have been trying to be, but we ourselves as private sector operators, we have to find a way to ensure that we stimulate ourselves to be able to have access to beautiful things that government may bring to us, like all these single-digit interest rates we are talking about.
Yeah, so how involved are you in this credit guarantee program of the government? Because it sounds really interesting. I mean, they have a lot of money, 100 billion naira initial capital.
Yeah.
I can imagine how many small businesses can benefit from this. But of course, for it to be sustained, there has to be the data that will ensure that, because I mean, there was a data that came out of Kenya that there was increase in credits to the private sector, and there was also increase in purchase of cars. I'm sure that's not what we want, so you need data to be able to follow up and ensure that the capital is being used for what it's supposed to be, so that it can be repaid for other people to also access it.
Yeah, so that's where the bureaus have come handy. Already, like I told you this morning, we'll have at least 2 million businesses in the database already. That's for those who have taken one credit or the other. And you realize that among the 50.5 million Nigerians that who have taken credit as well, most of them own businesses. Some of them actually probably borrow for their businesses. Okay, because most of them are sole proprietorship. They are one-man businesses, and you can't separate them from their business. So most of them take that fund, like the loan they take, to be able to fund their businesses. So I think that's the starting point for us, and I think that's the starting point for the National Credit Guarantee Company as well. Don't forget, they are a guarantee, entity. The lenders will still be the one to do the lending, and in doing the lending, the guarantee company is not guaranteeing them the 100%. It's guaranteeing them 60%. So which means they still have to profile those businesses. And in doing that, they come back to the bureau. And that's the link. So the credit bureaus still become the versatile, repository where they have to approach to see who has already benefited, what has been the behavior over time for those who have benefited. And to also know those who have never benefited. Because if your name is not in the bureau, and the bureau have data of all the banks in Nigeria, it then means we have never benefited from a formal financial system. That they have to take differently. But that also can then help for them to really go in there and say, okay, we can take a bet on this particular company, since we know that if we give the loan and he refuses to pay, at least there's a 60% guarantee of the loan coming by. You won't lose everything. So that will affect, it will take them to be more bullish in terms of granting credit. It will take them to really water down the risk, profile, the risk, risk profile of themselves. To say, okay, before we say you should have ABCD, now we can have only ABC. Okay, the D we can deal with because there's some level of comfort that's already provided for us. That's the link between the bureaus and the. So once those people begin to take the loan, then those new data will begin to come to the bureau. And that's where we can see the increase, the surge that we have been looking for all this while. So it's a very good thing. And don't forget, that also will help to also say, okay, collateral requirement, which is also a big deal for SMEs, will also be tamed somehow, because there will be some level of, consideration on that regard. They also pricing is also a major issue for small businesses when it comes to loans. So where the lenders believe that they have some level of comfort as to repayment, the risk element, the risk pricing of the risk will come down a bit, and we expect that to also bring down relatively the interest rate regime as we go into this scheme.
So when businesses, individuals approach a lender for facility, I'm sure they ask for the purpose.
Yes.
Is there a follow-up as to let's know if that purpose was really, used for it? Is there anything like that?
Yes, because there is. If you apply for a loan, there are so many information you provide, including for what. So is it for working capital? Is it for acquisition of assets? Is it for export? Whatever you need, you provide it, because that would then enable them to tell you the type of loan that they are going to give to you, the tenor of the loan, and all other terms and conditions. Because you don't forget, in Nigeria, there are some level of loan categories that CBN has given opportunity of moratorium to those who benefit from it. So if you're taking a Greek loan, for instance, there's some level of moratorium before you begin to repay. So they will have to provide that. So once they provide that, the banks follow up through what we call portfolio monitoring. They monitor that portfolio. Say you take a loan for 12 months, every 3 months, the law says they should check you up every 3 months to say, are you still in line? Have you disbursed the money for the purpose you took it from us? Are you repaying your loan? Have you taken another loan somewhere? Are you struggling? Can we repackage the loan? Can we restructure? And so on and so forth like that. So they do follow up. Don't forget, once banks also have very good credit customer, they want to keep on servicing that customer. So even only for the purpose of determining, should we, give more opportunity to this person? Because in the process of relating with you, they see more opportunities of how they can help your business. So deploying additional form of loan, or even giving you capacity. That's why today, a lot of those banks are doing capacity building for SMEs. Some targeted at specific sectors, some targeted even at gender, women in business. They build their capacity. You see that happening in a lot of these banks. So that's the way it is today.
So how close are we here in Nigeria to a time when I want to take a mortgage, for instance, and I can present my credit rating, and that can, serve as a requirement, exactly. Yeah. How close are we to that part?
We are very close, because we now have credit score. No, we are there already. It's just for us to, like I told you, we have 50.5 million Nigerians. All those ones have credit scores already. So, and for mortgages, scoring is very important for lenders. They want to know your score. That will help them to determine whether they should give you, under what terms and conditions, the interest rate they should give you, and all of that. So to the extent that we have over 50 million Nigerians already having credit scores, that tells you how that at least 40% of bankable population or adult population are already in that position. I think what stops a lot of people is the income. The income level is still very low for a lot of Nigerians. And so if you take a mortgage or an auto loan, how do you repay? And so that capacity to repay is what can be a mitigating factor. I mean, a factor that will not allow them to give you the loan, because you also have to present your income statement to say, yes, I have this. And you remember today now, if you want to build anything, you probably need at least 50 million or so. 50 million over 10 years, 15 years, 20 years, how much does that come to in a month? And then with your salary or the income you have, will it be able to get you the capacity to keep on servicing the loan and repaying the principal? So that is where we are today. I think it's for me, our cup is half full. Okay, it's not half empty, because a lot of people now are in the credit space. And more and more.
It's the purchasing power now that we need to balance up.
Exactly. We need to enhance the income of Nigerians for them to be able to benefit.
Or we have more low-cost housing, real low-cost housing.
I believe architects can design.
Not the government low-cost housing. All right. Thank you so much, Dr. Tunde Kokola, Managing Director and Chief Executive Officer of CRC Credit Bureau. Thank you for your time and views.
Thank you.